This podcast is brought to you by Customplan Financial Advisors Inc., an independent insurance managing general agency in Canada. FINANCIALPODCAST.ca was developed with one goal in mind: to educate Canadians on important topics that affect their financial well-being and make it readily available to all. We welcome you to plug in and learn with us. If you have questions, please email us at contact@financialpodcast.ca.
We're pleased to have with us today Corrine Fiesel, who's a corporate lawyer.
Yes.
And so welcome to our podcast today, Corrine. And why don't you just tell us a little bit about yourself before we get started?
Great, yeah. As Dennis said, I'm a corporate lawyer. I've been a lawyer in mainly Calgary for almost 20 years now. I practiced for large firms in Calgary, Vancouver, and the Cayman Islands. Had a nice stint there for a while. Working in corporate law and corporate finance, doing securities. And then I did 2 years at a TMX subsidiary company, and now I have my own practice.
Well, good for you. So, welcome to the show. So today we're going to be focusing more on individuals who may have a business and they want to incorporate it. Mm-hmm. So do I need to register to have a business?
No, you don't. So anybody can have a business and run it as a sole proprietor. And you don't need to be registered in any way to do that.
So then what is the difference between a self-employed sole proprietor or a corporation?
Well, self-employed and sole proprietor are the same thing. It would be an individual running a business, usually under a trade name, and we can talk a bit about what that means. But the best way to think about it is with taxes. So as an individual running a sole proprietorship, when you file your individual taxes, the business is incorporated into that. So you just file one tax return as an individual, and your business would be part of that income that you're declaring as an individual. A corporation, when you form a corporation, becomes a legal entity unto itself. And so suddenly you're filing a tax return, a separate tax return for that business. So you have yourself as an individual, and you are then a shareholder in the business or the corporation that you own.
Very good. So you mentioned trade name. What is a trade name?
A trade name is just a name that you conduct business under. So it can be anything. Somebody running a bakery, it could be Betty's Bakery, or Go Fast Motorcycles, just to name some dumb examples. But you don't necessarily have to register a trade name. You can carry on business under a name that you choose. It's just that registration provides proof that you actually are using that trade name.
And it would also protect you from someone else using the same name. You would have kind of a copyright to that trade name if you registered it.
Yeah, somewhat. It depends. You can have the same sort of trade names if you're carrying on a different kind of business. A trade name is not like a trademark. A trademark is an intellectual property registration that you file with the federal government of Canada, and that can be either a symbol, a logo, or a name, a word mark. And so the trade name, a name under which you're carrying on business, and a trademark, which is an intellectual property symbol, are quite different.
Okay, well, that's good to know.
Mm-hmm.
You are listening to FINANCIALPODCAST.ca.
So when should I open a GST account?
GST is required to be paid, I believe believe the threshold is $30,000 per year. So if you think as an individual or as a corporation that you own that you're going to be making more than 30, everybody hopes that they are, you should register for GST.
Could you just elaborate a little bit for us on the 30,000 threshold?
Yeah, the $30,000 applies to business income. So, for instance, if you are an individual who is employed and you're running a business on the side, the $30,000 would apply to that business income, not to the other personal income you're making.
Very good. So if I wanted to incorporate my business, how would I go about doing so?
Well, you have to do that through Alberta Services. The registry services offer incorporation, but you can also do that through a lawyer or a paralegal.
And then another question is, who should incorporate?
Well, incorporation has a couple of benefits. The main one is limited liability. So once you incorporate, as I mentioned previously, a corporation becomes a separate legal entity, and you as an individual are a shareholder of that entity. You are only liable for the acts of the corporation up to the point of your investment, rather than having that liability intermingle in your personal life. That's one main benefit of incorporating. The second thing that a corporation does is it gives you choice about how and when you want to pay out income to yourself. So you can pay income out in various ways: salary, bonus, dividends, return of shareholder loan, various ways to get income out. And that in turn gives you choices about how you're going to pay your taxes. Not whether you're going to pay them, but it gives you some tax planning tools, I guess I should say.
I know some people kind of entertain the idea of incorporating because they think they're going to pay less tax. Is that a fallacy or?
Yeah, I'm not a tax expert. I don't pretend to be. But the federal government's philosophy was that when an individual has a corporation, they do get a lower tax rate, but that combined with the income that they pay individually, because remember, you're bringing money out of the corporation and paying it to yourself, and then having to file a separate tax return as an individual for the money that you're then declaring as income. So those two things together, the corporate income and the individual income, were supposed to equal what would normally be an individual's tax rate. I can't comment on the new federal tax changes, but apparently that is no longer the case with the new changes that have come in.
So we talked about the advantages of opening or creating a corporation. What are some of the disadvantages?
Yeah, the main disadvantage, I would say, is cost. And that may not be relevant to someone who has quite an established business. But for a startup company, you suddenly got, well, not only the cost of incorporating, which is about, if you go to a lawyer, it's usually around anywhere from the $1,000 to $1,200 or $1,500 mark. But then you've got ongoing corporate annual returns to file. And you, as I mentioned, you also have to file a separate tax return for your corporation. So you're suddenly looking at probably having to get an accountant to do your financial statements and file a tax return, and maybe a bookkeeper to do the corporate bookkeeping. So, there's suddenly a lot of expense involved that maybe you didn't have before.
So now, if someone was convinced that this is the route they want to go, they've got two options. They can, like you mentioned, go down to the Alberta Registry and they can register there, or use a lawyer for the registration purpose. What is the difference?
The registry is just going to give you what I might call a vanilla version of a corporation. So you're going to get very basic share rights. When you incorporate, maybe it would be helpful to sort of go through the process a bit. The first thing you have to do is choose a name for your corporation, and you might just want a number. And if you want a number, you can just go to the registry or a lawyer and say, I just want a numbered company, and they will assign you whatever the next number is that comes up. But if you want a name, you have to also get the registry or a lawyer to do what's called a nuance search, which is a name search, to make sure that name that you want is available. Then once you know that name is available, the next step is to file what are called articles of incorporation. And the articles set out the shares, the classes of shares that are created, and the rights associated with those. So when you go to a registry, you're going to get the most plain Jane share rights. And if you go to a lawyer, though, they will tailor the shares and the creation of the shares to exactly what you want and need, and will likely have in their precedent bank a variety of different shares, and that has a lot to do with tax planning and being able to issue, for instance, preferred shares, so that you can issue shares to your spouse or your children, do some income splitting. A lawyer will just have a lot of knowledge that they can pass on to you, whereas when you go to the registry, you're simply ordering a corporation, and they'll just give you the most basic version.
The basics, yeah, exactly. So unless you have a good understanding of the different share arrangements and
what you need for the future.
Exactly.
Yeah. Exactly.
So if I incorporate, should I have my spouse to be also an owner of the corporation?
That really depends. There are income splitting opportunities to be had, but it really depends on what kind of income your spouse is making. If your spouse is making much less income than you are, if your spouse is a stay-at-home homemaker, then it's probably a good idea to make them a preferred shareholder. So again, you have that choice to bring income out of the corporation in the hands of someone who is in a lower income tax bracket.
So what's a unanimous shareholder agreement, and do I need one?
Yes, I recommend that anybody who has more than just they and their spouse and their corporation have a unanimous shareholder agreement. What that is an agreement amongst all the shareholders of the corporation on how the corporation will be run in detail. So things like, are we going to need one signatory on checks, or if we reach a certain threshold of expense, will we need two signatories on checks? How are we going to vote on the directors every year as shareholders, and how will the board of directors be governed, and that kind of thing. But the most important thing that a unanimous shareholder agreement does is give you exit strategies. So otherwise, if you have a group of shareholders, for instance, let's say you have 4 shareholders in a corporation, and they each have 25% of the shares, well, that would mean that if they all can't agree on something, there is no way to break that tie unless you have an agreement in place that says how that tie may be broken. It also gives you a way of selling your shares because you can put provisions into the unanimous shareholder agreement that talk about ways to offer your shares to others, and things about what happens, for instance, if tragedy strikes, one of the shareholder dies, what is going to happen to those shares, because you don't want to end up, for instance, with a ne'er-do-well brother-in-law, for instance, owning those shares, and you really don't want to do business with this person.
That's good advice.
You are listening to
FINANCIALPODCAST.ca.
So, and once I set up a corporation, what is the ongoing obligations for filing with the government?
Right. There's just a once a year annual return that you have to do. So you file, if it's an Alberta corporation, you would file that with the Alberta government. It's simply a statement saying that we're still in business. There's been no change to our registered office or our directors. And if there has been a change, we've already filed that notice, and the shareholders remain the same. If any of the information is different, then you include that in your annual return.
So now you can either register provincially or federally, and what would be the difference?
Well, a federal corporation under the Canada Business Corporations Act is simply that. It's registered with the federal government. Some people like it, especially if you're planning to do business across Canada. It probably is a good idea to register under the CBCA. It doesn't, however, permit you to do business in a province without also being extra provincially registered there. You can, if you register federally, you can do business in the province of Ontario, but if you are also going to be doing in business in Alberta, you have to extra provincially register there, for instance.
Or any other province that you wanted to do business in. So if I was just registered provincially, I would be restricted to doing business in Alberta only. Is that correct?
Yes. If you are going to go do significant business in BC, you should become extra provincially registered there or in any other province that you would be doing business in.
Good. So what's the difference between a director and an officer of a corporation, and what are their roles?
A director is appointed by the shareholders. So you cannot form a corporation without appointing directors. The shareholders vote on the directors every year, and the directors are really the overall management, not the but the mind of the company, I'd say. So they're really the gatekeepers, the overall caretakers, making sure that the corporation is being run in a proper fashion. The directors, it's the board of directors that actually appoints management. So the president, vice presidents, secretary, treasurer, that kind of thing. The directors appoint them and ultimately oversee the management of the corporation.
Today we see a lot of people opening up online businesses. Do you want to just give us some pointers on what they may or may not want to do with that?
Yeah, we were just talking about extra-provincial registration and that kind of thing. And I don't purport to be an internet law specialist. This is a whole area. So first of all, I guess I'd recommend that those people get legal advice from someone who is a specialist in internet legal issues. But it really, where the mind and management of your company is one of the most important things. So things like where is your head office if you have bricks and mortar? If you're running an online business, where is your server located? Where is your staff located? And then there'd be some kind of a materiality threshold as well. So let's say, just as an example, you have a business in Alberta that you're running, but you have a salesperson that goes to BC now and then. They're not based there full time. They travel from Alberta to BC. It really would depend on how much time that person is spending in BC, what your customer base is there. And it's the same with online. So how much business would you be doing in that other province? Do you have sales staff that go there? Do you have an office that you can go to when you go there? Those are the kinds of things that if a court were looking at them to determine whether you needed to be extra-provincially registered or not, those are the kind of factors they'd be looking at. But it is a complex question.
That is good advice. So, talking about advice, do you have some advice for business owners?
I would say overall, a couple of things. Put things in writing. Everybody, when you're getting started and you think that you're friends with whoever your partner is going to be and that kind of thing, don't assume that things will always continue that way, because I've seen many horror stories of of business owners and shareholders and corporations who thought they were going to get along forever, and it doesn't end up that way. And life happens. People pass away. Some people get divorced. You want to make sure that your business is protected by putting things in writing. And I would say it is best to do those things as soon as possible when everybody is getting along and happy, rather than having to play catch up when there are some serious problems.
You just mentioned there things don't go according to plan. You want to close the business. How difficult is it to wind up or close a corporation?
Well, it really depends on what the asset base is and the liabilities that they have and that kind of thing. But in order to dissolve a corporation, you have to pay off the liabilities and dispose of any remaining assets to the shareholders of the corporation that have a right to receive those assets. And then what is required is an affidavit given to the corporate registry by one of the corporate principals saying that this has been done and that the liabilities of the corporation have been paid. So it could be quite an involved process to wind it down if you have a complex asset and liabilities base. If it's a very simple corporation, it's really not much of a problem at all.
You are listening to
FINANCIALPODCAST.ca.
Well, that's been very great. I really appreciate the information. So if someone listening to our podcast wanted to get in touch with you and access some of the information you have or your services, how would they do so?
Yes, for sure. I have a website at www.legalone, so legalone.ca, or you can always call me 403-613-5573, or you can email me at law@CorrineFiesel.com.
Very good. Well, thank you, and it's been a pleasure.
Oh, thanks very much, Dennis.
The views expressed here are those of the participants and not those of Customplan Financial Advisors Inc., its affiliates, or subsidiaries. This is not intended to serve as a complete analysis of every material fact regarding any company, industry, or security. This presentation may contain forward-looking statements. Investors are cautioned not to place undue reliance on such statements, as actual results could vary. This site and podcasts are for general information purposes only and does not constitute investment advice and is not intended as an endorsement of any specific investment product or service. Individual investors should consult with an investment professional about their personal situation. Past performance is not indicative of future results. If you are unsure about what is the best course of action for you in your financial planning, then we suggest you consult a fee-based independent financial advisor or get in touch with us to discuss your individual situation. Our phone number is 604-687-7773.